even though there are a number of seemingly bullish reasons for the market to rally from here, as you mentioned, with Venezuela there, we've got the sanctions in play. We've got sanctions with Iran as well. We've got the OPEC production cuts kicking in as well. But at the same time here, prices just can't seem to rally. For Brent as well, we're kind of stuck around that 63 mark. It's really kind of like a magnet. And so until we get further clarity going forward, it seems that prices just don't want to rally at this point.
Who has an interest in higher oil prices, and what can they do about it? Is it possible to, to further? Could it be in, OPEC? Do they want prices higher? Can they orchestrate that, or they can't do it anymore?
I believe that they can, Joe. What we're seeing at the moment is, well, Saudi production in October was at 11 million barrels a day. Their report came out yesterday and showed that production has dropped to 10.2 million barrels a day. And then they're signaling that for March, they're going to drop to 9.8 million barrels a day. And so the signs there are, we know from the Saudi energy minister, he's built up this credibility over the last few years. He's signaled to the market what's going to happen, and then they've followed through with their flows. And one thing that we are seeing, particularly with the US, is Saudi flows dropping to the US. So we've seen them drop from about 1.15 million barrels a day in October down to about 650,000 barrels a day in January. The reason this is key is because that's a drop of 500,000 barrels a day. You see that stretched over a 6-month period, that's going to reduce US oil inventories by about 90 million barrels. And so that's how Saudi believes it can raise prices here. And so that's what they're doing.
Every year, at the end of the year, we go back and say, wow, we really were wrong about oil prices. What would the surprise be this year by the end of 2019? What is your view on what the high and low will be for the year?
Well, the consensus, Joe, seems to be that the OPEC production cuts are going to kick in through this year. The economy is going through this wobbly patch, but we could see things better. You know, hope springs eternal. And so there is this expectation that in the second half of the year, prices should be considerably higher from where they are now. So therefore, from that perspective, it seems that the counter-argument to that is that prices are going to remain low because of economic concerns on a global basis. We're seeing demand growth concerns from an oil perspective, not only coming from China, from South Korea, but we're seeing from Europe as well. And so there's that angle. And so really, with US production increasing as well, even though it isn't the right type of crude really to offset the heavy sour crude we're seeing dropping from, say, Venezuela and Iran, that could keep prices in check here. And so lower prices is potentially the less likely case, but potentially the one that could happen.